Hello everyone, welcome to our FinTech Fireside chat. And I'm Jamie, project coordinator of the PolyU App Store FinTech Adoption Index. We call it FAI survey. For everyone to know, it's a 2-year survey and starting for this year. So the survey is for understand Hong Kong people's FinTech users and adoption towards FinTech. And we are really glad to have Neil and Raphael from FinTech Association of Hong Kong today. So Neil is the chairman of FinTech Association and Raphael is the general manager of the association. Welcome you guys. And also, we also have Professor Jack Poon from PolyU. Professor Jack Poon is the professor of practice in FinTech from PolyU. So from our last quarter FAI survey, we found that security is actually the largest concern of people's FinTech adoption. So as an association perspective, how do you think FinTech industry can improve in public trust in FinTech?
Yeah, so maybe I can take that question first. I think, as far as the public's trust in FinTech is concerned, I think number one is, what are the data privacy rules and regulations and so forth in safeguarding their information. I think it's also at the same time communication to those different constituents in terms of, if there is any sort of leakage or any sort of issues in terms of disclosures, right? So give you a quick example. I mean, I'm not pointing anybody out specifically, but, back in the day, a few weeks, if not a couple months ago, WhatsApp went down, right? Did you see any notifications from WhatsApp? I think this is kind of one of the key questions, right? The way that I found out is, first off, my WhatsApp was not operating. Then I looked onto the internet and then I found some different articles, and most of the articles were actually coming from the Middle East. Actually, it did not come from the principles, if you will, right? So this is kind of an issue when you're dealing with this type of data security. Obviously, the types of regulations that we're looking at are just basic block and tackle, but ultimately, cybersecurity for across the board, whether you're talking about inside of FinTech or whether you're talking about different corporates, I think this is very important. But then when you're talking about financial information or personal information beyond that, that's pretty significant as well. It just goes to show how deep this information that is disclosed, right? If you go into the dark web, even they had some leakages for China data that were available. These, everyone's telephone numbers, emails, all these different things were actually disclosed on there. But how do you manage that type of situation or that type of information disclosure is more on the communication side. So,
okay, may I supplement a point to that? In EU and in North America, there is a pretty hefty fine if information is leaked or there is any data privacy breach by the company, and it literally counts towards either the revenue or the number of breach by dollars that you will be fined on. In Hong Kong, there is no such scheme yet. Do you think that the financial services community, from the biggest bank, the biggest insurers to the smaller startup that is working in this sector, will accept such a scheme in terms of slapping on the huge fine? Because from the consumer standpoint, we will think that, hey, if there is a penalty associated with it, then it definitely will help to deter the company from misusing or leaking my information. Your thoughts on that?
Yeah, I mean, I think ultimately what we're trying to do is safeguard the consumer, right? And it doesn't matter if that's a large incumbent bank or whether it's a small FinTech. I think if we look at it, how do we having the, let's say, let's say running Usain Bolt, he's the fastest man in the world. I can't go to a 5-year-old kid and expect him to run the same speed, right? It's just not reasonable, right? So what is actually reasonable is there a way that we can bridge, whether it's inside of the governance or inside of the rules and regulations, how do we bridge that? And I think that'll be a topic that we'll talk about a little bit later is, in terms of the APIs, in terms of the sandbox, are there certain basics that could be provided for these FinTechs that they can do in a very low cost, low time, low resource, low budget perspective that we can support as an ecosystem, right? And that's where I think that this could be the bridge for those smaller firms. I mean, I would say for the big firms, they're probably doing that and much more. And they have the budget and the resources to do that. But to put the same level of safeguard on those individuals, you're just basically trying to kill those startups, right? You just shoulder them. That's not even like their core business. Maybe unless they're a cyber security company, they're not in that business, right? So they're just trying to do some other businesses like, payments, lending, wealth, insurance. But, if we saddle them with those different types of risks and costs and resources, I think it's quite difficult for them, right? So,
Raquel, anything to add on that?
Yeah, I think you raise an important point there, Jack. But I would say that is the second part already, because I think first of all we have to look at from a Hong Kong point of view how we prevent data misuse. Your point already deals with an incident, and then what is the compensation therefore? I think in Hong Kong we have to do the first step first before we can maybe add on the second. And you mentioned the European Union, for example. I think they set a great example with GDPR from a global standard perspective. I think at the time when it came out, everybody was thinking, oh, this is way too stiff and way too tough to implement. But it has become a global standard or blueprint of that, where everybody strives to take a copy of. And I think having something like GDPR in place first, including a mechanism for data consent sharing, is the first step, and to which then can be added any form of compensation.
Okay. Fair enough. Jamie, you want to walk on to the next questions?
Yeah. So both Neil and Raphael mentioned about the regulation. So in terms of the regulation, we know that in November, the government actually have new regulation towards the virtual assets. So do you think, and afterwards it have some news about FTX. So do you think what would be the effect towards the industry, especially the crypto, the NFT, the Web3 industry?
yeah, I think that's a very positive move, right? I think as far as I'm not, I think Jack knows I'm inside of the blockchain, Web3, and all that good stuff. So I think I'm definitely in favor of this area. I think it's something that, if you look at it historically, Hong Kong has been the center. We were actually a virtual asset center, just not in a regulated fashion, right? And a lot of these folks ended up leaving, going to different other jurisdictions like Singapore, like Dubai, and so on and so forth, like Bahamas. We won't talk about that too much, but so inside of that kind of situation is, if we look at the overall macro situation, I think it's net positive. Number one is obviously the entire crypto virtual asset space is down, right? So the market is down, generally speaking. Number two, so risk is off in that sense. Number two is that the other jurisdictions have already shown their cards, right? So we see the frameworks for Dubai, we see the frameworks for Singapore, and so on and so forth. Number three is that in some ways we dodged a bullet, right? I mean, literally, FTX was in one of the offices in Pacific Place before, right? So in some ways we dodged a bullet there, and some of the other ones, whether you're talking about Terra or 3AC and so on and so forth, those were in other jurisdictions within Asia. So what that gives us is, number one, market is down. Two, other people's regulations have shown their cards. Three, we dodged a bullet. But what does that mean? We can learn from these cases, right? These are all very useful for us to put together a more robust framework to understand what could potentially happen. If you said, what's the most basic fundamental thing about regulations is knowing who the directors are. Nobody checked who Sam Bankman-Fried was, right? There was no background check for him, right? So I think this is kind of a very, very fundamental piece of rules and regulations that we can implement and Hong Kong can learn from. So I think we're in a great position to take back that spot as a virtual asset hub. I don't know, maybe Ralph, you want to share more?
No, just adding to that, I think I've seen news reports that said, the Hong Kong or the SFC in this case coming out with this at this very moment is a terrible timing, given the headlines. But I would fundamentally disagree. I see it the completely opposite way. It's a great timing to do this because, first of all, it creates right now there will be a global push to avoid regulatory arbitrage globally, and Hong Kong having set its standard there, and by June next year becoming in full effect, this is a perfect timing right now to do this. And of course, Hong Kong's take was not to do something on the short term. This is a long-term play, and in 2-3 years' time, nobody will look back and say this was a terrible timing. They will say it was perfect timing because we went through crypto winter, and as Neil was mentioning, there's a little bit of de-risking right now, so it's a perfect time to set the stage. And then from that moment on, create a platform, a framework that allows then firms to get into this, or even attract foreign companies back to Hong Kong.
You guys mentioned that Hong Kong was the virtual asset hub. So according to our FAI survey, so actually crypto has the lowest adoption rates among the 5 sectors, while the mobile payment, it has the highest adoption. So do you think this is a problem that we need to improve, or how we can improve in terms of the crypto adoption rates? Or do you think, it's okay?
I mean, what's a global standard, right? I think even if you look at sort of the global standard, it's, 1 out of 10, it's not a huge number. As it is, I think that's the whole idea of how do you make Web3 accessible to everyone, right? And I think this is where you're talking about CBDCs, digital yuan, EHKD, these types of things that are coming into play inside of the ecosystem. So ultimately, I don't think that it's, I wouldn't say like, okay, fine, we're going to go to El Salvador format, right? And everybody download a wallet and get Bitcoin, right? I don't think that we're going to go that way. But I would say if people are interested in it, it should be accessible, right? So I think this is kind of the direction that we're going, is we are going to make virtual assets accessible to everyone, accessible to the retail, versus some of the other jurisdictions who are pulling away from that, or have never introduced it, right? Or have stuck with professional or institutional investors. So I think this is a pretty big change in the game as far as Hong Kong is concerned, but we can't make it mandatory, but we can make it accessible. So I think this is a key point that the rules and regulations will help out in. So
I'm not surprised by the results because mobile payment is the easiest walk into FinTech. Everybody starts with PayPal, or then have a PayMe, for example, if you have an HSBC account, for example, and then maybe you explore a virtual bank, either through a credit card or or even with a separate account. You like the user experience, then you get more comfortable with it. Maybe that helps you to go into a digital insurance, not necessarily for life insurance, but maybe for travel insurance, etc., and try it out. And then, maybe as a last step, you go into an online brokerage, or even that includes a cryptocurrency wallet, albeit that should require some financial investment education first.
Okay. Thank you so much, Neil and Rev and Professor Poon, for joining this Fireside Chat. Thank you.
Thank you.
Thank you. Okay, see you guys.